European markets are navigating a complex environment this morning, marked by evolving central bank narratives and key U.S. economic data. We observe a cautious sentiment pervading early trading, with investors processing recent inflation figures and anticipating future monetary policy shifts. The Stoxx 600, for instance, shows limited directional conviction, reflecting investor indecision. The European Central Bank, specifically Christine Lagarde, faces scrutiny following reports of a €140,000 payment from the Bank for International Settlements despite internal prohibitions. While this is not directly market-moving, it adds a layer of transparency focus to central bank governance. On the economic front, UK inflation, particularly in the hospitality sector, continues to climb. This persistent pressure signals ongoing cost challenges for businesses, impacting consumer spending power and potentially broadening inflationary pressures across the economy. These factors collectively influence the cautious opening, setting the tone for a potentially reactive day as new information emerges. European markets reflect cautious optimism amidst policy changes and ongoing inflationary pressures. US markets were closed overnight, but futures indicate a marginally positive start to the trading day in European hours. The S&P 500 futures, S equals F, are up 0.17% at 6,882.50, while Nasdaq futures, NQ equals F, mark a 0.22% gain at 24,882.25. The Russell 2000 futures, RTY equals F, also show a modest increase of 0.21%, trading at 2,646.30. These slight upticks suggest a measured positive anticipation ahead of the full market open, likely influenced by the recent US inflation data and the significant development concerning Federal Reserve leadership. Individual tech giants are showing mixed to strong performance in early indications. Nvidia is up 1.30%, reflecting continued AI sector strength. Apple also sees a 1.33% gain. Amazon leads with a 2.44% rise, closely followed by Alphabet at 3.51% and Meta Platforms up 1.62%. Conversely, Microsoft is down a slight 0.29%. Tesla maintains a modest 0.10% increase. MicroStrategy, despite broader crypto market declines, is up 1.91%, demonstrating a certain stock-specific resilience. US futures show modest gains, reflecting early market sentiment influenced by tech and macro signals. The bond market is currently processing significant macroeconomic signals that could redefine future yield trajectories. The US inflation rate has slowed to 2.4% in January, a development closely watched by fixed-income investors. This deceleration could potentially ease pressure on the Federal Reserve to maintain higher interest rates, impacting bond valuations and yield curves. Concurrently, US GDP growth for late 2025 disappointed expectations, suggesting a tempering economic expansion. A slower growth environment often leads to a flight to quality in the bond market, potentially pushing yields lower as investors seek safe havens. This scenario is further complicated by political commentary, with former President Donald Trump blaming a government shutdown for the GDP figures. His broader stance on trade wars could also undermine hopes for significant US interest rate cuts, introducing geopolitical risk premiums into bond yields. The interplay of slowing inflation, moderating growth, and potential policy uncertainty creates a nuanced outlook for treasuries. Bond markets will react to inflation and growth figures, shaping future yield expectations. The most significant development impacting monetary policy is the appointment of Kevin Warsh as the new Federal Reserve Chairman. Warsh's known economic views and past policy stances will be meticulously scrutinized for clues on the future direction of US monetary policy. Markets will be looking for signals regarding interest rate paths and the Fed's approach to inflation and employment mandates. His appointment introduces a new variable, potentially shifting the Fed's forward guidance. This change at the Fed comes as US inflation data shows a moderation to 2.4% in January, raising questions about the necessity and timing of future interest rate adjustments. A new Fed chair, combined with cooling inflation, could lead to a re-evaluation of easing cycles. In Europe, the ECB remains in focus. Christine Lagarde's reported payment from BIS, despite internal rules, while not a direct policy decision, underscores the ongoing emphasis on institutional integrity for central banking bodies. Such issues can subtly influence public trust and perception. The Hong Kong prime rate, though geographically distinct, also highlights the global interconnectedness of monetary policy decisions. Central banks navigate inflation, leadership changes, and transparency issues in a globally interconnected financial landscape. The commodities market presents a mixed picture, reflecting diverse supply-demand dynamics and geopolitical influences. Gold futures, GC=F, are down 0.65%, trading at 5,147.60. This decline could be attributed to a number of factors, including potential strengthening of the dollar, or perhaps investor reaction to the new Fed chair appointment, which may imply a more hawkish stance and less safe haven appeal for gold. The broader outlook for gold prices continues to be a subject of intense debate among analysts. In the energy sector, crude oil futures, CL=F, show a slight increase of 0.14% to 65.67. This marginal gain comes amidst broader concerns about energy demand weighing on prices, as noted by market commentators. However, the sector also sees specific project developments, such as Invenergy's supply deal for new natural gas-fired power plants in Arizona, indicating some underlying demand. Natural gas futures, NG=F, are down 1.59% at 3.04, despite recent surges driven by powerful blizzards and higher LNG exports. This suggests a potential normalization or profit-taking after the weather-induced price spike, with the market assessing the sustainability of demand. Additionally, geopolitical factors, like Petro's policies impacting Colombia's natural gas industry, contribute to regional supply concerns. Commodities show mixed signals, influenced by global demand, specific supply developments, and investor sentiment. Technology remains a dominant force, exhibiting robust performance despite overall market caution. Alphabet leads with an impressive 3.51% gain, indicating strong investor confidence in its growth trajectory. Amazon follows closely, up 2.44%. Meta Platforms is also strong, up 1.62%, suggesting renewed interest in its core business and evolving strategies. Nvidia, a key player in the artificial intelligence segment, continues its upward momentum, rising 1.30%, reaffirming the market's strong belief in AI-driven growth. Apple also contributes to this tech-led rally, up 1.33%. However, not all tech moves uniformly. Microsoft shows a slight dip of 0.29%, perhaps reflecting some profit-taking or sector rotation. Tesla registers a modest 0.10% gain, indicating steady but not explosive demand in the electric vehicle sector. MicroStrategy, a company with significant Bitcoin holdings, is up 1.91%, showcasing a disconnect from the immediate cryptocurrency price action, potentially reflecting a belief in its long-term strategy or a more traditional equity valuation. Michael Burry's end question for tech giants, though cautionary, does not appear to be broadly impacting these current price movements. Meanwhile, figures like Cathie Wood continue their strategic bargain hunting in specific growth stocks. Technology leads with AI momentum, while other sectors show more varied, stock-specific performance. The foreign exchange market is currently operating within a framework of evolving monetary policy expectations and geopolitical undercurrents. The recent deceleration in U.S. inflation to 2.4% is a primary driver, as it potentially reconfigures the timeline for Federal Reserve interest rate adjustments. A dovish shift from the new Fed chairman, Kevin Warsh, could put downward pressure on the US dollar, as the interest rate differential narrows against other major currencies. Conversely, any signals of a more hawkish stance from Warsh, or persistent inflation concerns, could support the dollar. The European Central Bank's situation, marked by scrutiny around Christine Lagarde, does not directly impact policy, but it adds a layer of institutional sentiment that currency traders monitor. Additionally, comments regarding former President Trump's trade war potentially undermining U.S. interest rate cuts introduce an element of political risk to currency valuations. Such trade tensions can lead to increased volatility and a reassessment of global capital flows, impacting both major and emerging market currencies. Currency markets await clear signals from central bank actions and geopolitical developments. The cryptocurrency market is experiencing a significant pullback, with Bitcoin, BTC/USD, down 3.09%, trading at 65,594.03. This notable decline indicates a testing of investor sentiment and potential profit-taking after recent upward movements. The broader crypto market often follows Bitcoin's lead, suggesting a cautious mood across digital assets. Interestingly, MicroStrategy, a company closely associated with Bitcoin due to its substantial holdings, is up 1.91%. This divergence suggests that investors may be valuing MicroStrategy more on its corporate strategy and software business, rather than solely as a direct proxy for Bitcoin's price. Michael Saylor, the CEO of MicroStrategy, recently signaled a potential 100th Bitcoin buy, demonstrating continued conviction despite the price dip. However, market skepticism persists, with figures like Nouriel Roubini continuing to label Bitcoin as a bogus asset, highlighting ongoing debates about crypto's stability and systemic risk. Furthermore, developments such as SBI deepening its XRP bet with bond incentives illustrate the diverse and evolving landscape within the broader digital asset ecosystem. Bitcoin retreats, testing investor sentiment, while crypto-linked equities show a degree of resilience. The economic calendar for the coming days presents several high-impact events that will significantly influence market direction. The most anticipated release is the first jobs report of 2026, scheduled for Wednesday. This report is critical, as it provides a comprehensive overview of labor market health, directly impacting the Federal Reserve's dual mandate of maximum employment and price stability. Strong or weak job creation figures could lead to recalibrations of interest rate expectations. Prior data, such as the U.S. inflation slowing to 2.4% in January and disappointing U.S. GDP growth for late 2025, have already set a cautious tone. These figures indicate a potentially moderating economy, providing the Federal Reserve with more room to maneuver on interest rates, especially under the new leadership of Kevin Walsh. In the UK, persistent hospitality inflation continues to highlight sector-specific pressures, contributing to the broader inflation narrative for the Bank of England. Market participants will closely monitor these upcoming releases for definitive signals on economic health and future central bank policy. Upcoming data releases will shape future monetary policy expectations and market sentiment. Today's market landscape is defined by the significant appointment of Kevin Walsh as the new Federal Reserve Chairman, which sets the stage for potential shifts in U.S. monetary policy. European markets open with cautious optimism, processing regional inflation data and anticipating global economic cues. U.S. futures show modest gains, driven primarily by strong performance in the technology sector, particularly firms linked to AI innovation. The bond market is digesting slowing U.S. inflation and disappointing GDP growth, which could influence future interest rate trajectories. Commodities show mixed signals, with gold declining while oil sees slight gains, all within a context of fluctuating demand and supply dynamics. In cryptocurrencies, Bitcoin has experienced a notable pullback, though MicroStrategy demonstrates relative strength. Looking ahead, the U.S. jobs report on Wednesday will be a pivotal event, providing further clarity on the economic outlook and guiding central bank decisions. Markets balance new leadership, economic data, and key earnings, preparing for potential volatility. That's all for today's market update. If you found this analysis helpful, please leave a like and follow for daily market insights. See you tomorrow.